Microphone check and screen share check, please. Okie doke. Good evening, guys. Nightly strategy podcast for Tortoise Capital for September 30th, 2022, the weekend report edition. So I want to highlight a few key elements with the regression line fractal framework. The first thing I want to talk about is the use of the MACD histogram. And there's some key points in that seasonal indicator, right? The first one is that when you go from summer into fall, that's giving you important warnings, especially when that Z3 pinch, super pinch cracks. When fall goes into winter, you had best pay attention because that's this move right here. And it stays in the winter until here. So if you're using the RLXD, you get to capture all of that winter move. The next one I want to show is just as we keep going to the right. So then you get a summer move, and then the summer move crosses the baby dragon and drifts into fall. That's the peak of that move. Couldn't quite get to fair value, and then the long slide into fall, and then winter begins, and that's this entire move. So the four seasons really does matter a lot. Now here's where the market goes into spring, and where it goes into summer briefly, and then fades immediately into fall, and then into a harsh winter, and that's this move right here. And now you have a spring that happens because of that little bump, and this is where it moves into summer, and that's a 15% move in your favor that gets to the RL 270 across the noise buffer, and then to the peak of summer, which gets signaled by a return to the Red River right in here. That's a warning. Now you get fall all the way down here until it goes into winter. And now you get this move in all of the winter. Now what I want to show you is that winter, spring, winter is an automatic short, which would have been short around 380, and today we're down around 357. So that's almost an 8% move indicated by that. So I want you to notice that the simplification of the market by using the MACD Four Seasons gives you very important information. And then notice how it's much easier to see moves with the price candles turned off and simply using the RL10 as price and influenced by the or informed by the regression lines for different time frames. Now I want to just show the power of the collapsing dragon. So when this collapsing dragon broke here, you get the sharp sudden down move. When this support level at that belly of the RL10 breaks, you get a second entry short. When this belly of the dragon breaks, what follows is a sharp sell-off. When the belly of this RL10 breaks, another collapsing dragon, you get this move just starting now. So the collapsing dragon and its ability to identify statistically significant support levels is really crucial for being able to exploit these downward moves. So that's a quick lesson on the RLFF and the Four Seasons of MACD. Take a look at the RL, or not the RL, the market 150 now, sorry. All right, so we're failing that test at the bottom of the 150 low. This is the 150 low now. Therefore, it's the 30-day and the 10-day and the 5-day and the 1-day low, cracking below 360. Look out below. The next one is at 351, and that support level goes way back. I don't even know if others would look at that as support. This is in officially free fall. And that's going to have a lot of concern in Washington this weekend as the midterms get closer and Biden continues to mumble and fumble around. The 30-day look back. Here's our 10-day, 10 to 20, 21 to 30. Note the leg 1 down, pause, leg 2 down, and then this little shelf in here broke today and it voted down on a relatively large range. So that's the beginning of the next leg of volatility. Whereas the 5-day volatility here, from peak to bottom, was smaller than the previous 5-day peak, or 5-day range. So this is potentially the acceleration of volatility, the downside. You still have the dragon resistance levels here. The PSAR will be right around 375 on Monday. 10-day high, 20-day high, 30-day high. Dramatically oversold. MACD is getting ready to roll under and fail back into the winter once more. On the 30-minute chart, you can see that the PSAR break did not last very long. It rolled over. There's your signal. When it crosses the baby dragon, there's the move for the rest of the day. And then this was the last 30 minutes. This range in the last 30 minutes, that was a bunch of people just bailing before the weekend, worried about a gap down on Monday before they could get out. Or it was a lot of leverage shorts, a lot of leverage longs that were trying to gain, just bailed. So that was almost some capitulation right there, intraday. It's not capitulation on the weekly yet, but and swing trades, but that was some intraday capitulation right there. All right, individual sectors. Start with the underperformers first. So there's your S&P baseline at minus 1.55. Diamonds in the Qs, 1.7. You have treasuries at minus 1.29 or hovering right near 100. The Russell, 0.73, and emerging markets, 0.37. So interestingly, these two growth-oriented ones were actually not as painfully affected as the large caps. So this was a lot of money leaving the markets. That's some long-term buy and holders trying to get out before it gets really painful. That's my gut. The underperformers by sector now. Staples, that's bad. Tech, 1.9. Consumer discretionary, 2%. Lithium, 2%. Oil, 2.23. Pretty shabby. Now, the individual companies. Now, here's all our metals. Here's Cliff, 2.18. Here's U.S. Steel, 2.3. And here's Alcoa, minus 5%. So all our metals got smashed today. Now, let's look at our semiconductors, the two weakest ones, Intel and Texas Instruments, 2.23. 2.23, and then only in NVIDIA was much better at only off 0.66. But those two continue to get smashed. Intel in particular is just as bad can be. You got Microsoft also suffering 1.9, Squarespace 1.63. To the upside. so we still got S&P here. Baseline at 1.53. Working up the stack. Mexico, Aussie dollar, blended commodities, FANGs. That's 1.16. Finance, energy, uranium, small caps, clean energy, agriculture, 0.65. Materials, both ARCs, pretty much flat for the day. Oil exploration flat. Here's the break line between gains, true gains and true losses. Bitcoin, Ethereum, biotech, commercial real estate, lumber, marijuana, retail real estate, and the other lumber. Now we're up to between a quarter and up 1.14. You have wheat and precious 2%, Brazil VIX 2.8. Coinbase, Robinhood, in the financial disruptors, were distinguished there above 3% and 4%. So not the previous leaders were all getting slaughtered in tech, but it's now you're looking to see a little more sense in this market with the real estates doing well. It's like maybe a flight to quality there, owning real assets. But and then lumber because of the inflation trade. That's wood. Brazil returns to its winning ways while the bigger indexes are getting slashed and burned. Let's look at the sniper trade of the day. Brought to you by the letter A for Alcoa. So Alcoa got smashed yesterday. Today, it's going to start off with, here was the close yesterday. Here's the gap down and started selling. I was very tempted in here because it had already moved a risk box from the open and was failing. I let the opening range 3 close, and then it broke lower, so I sold it here. Standard risk box. This was like a 1-2 exit. I wanted to get paid early, like a money management stop. So if you take that risk box down here and anchor it to the bottom, I'm risking 1 here. I'm giving back 1 there, so that feels like a reasonable exit. So that's about +2. Check or hold. All right, let's see what we get next. So PSAR flip. Now you'll notice that these are some pretty large bars compared to the standard risk box. It was really moving this morning. So we're long from here. Standard risk. I thought very seriously when this broke and when this R10 wiggled. So I was looking at second positions in here, but it was so volatile. We were so close to the close, and the rest of the market was getting slaughtered. I didn't. And then when it got up in here and gave me the clear Kata 2, I said, look, that could work, and if it breaks above here, this could really be a runaway day. So I put the second one on here. So we got the first one with about 1, 2, 3, 4, 5, 6. That's the latest you can put it on and still consider yourself to be a trader, of Alcoa. My brother would just say, hey, the 2-hour battle drill says put one on here and put one on there, and you should have already had 3 in there, is what he would say. This one gets a another excursion, and it's moving out nicely above the previous hump of the RL10. But that doesn't last long. It rolls over, so I just go ahead and cut it at what was once resistance is now, and I wanted to lock in the extra one. So that's about 8, because that's 7 plus 1 is 8, and that 2, so we're running a total of about 10 right now. Day ain't over. So 2 and 8. Now what we got is the PSAR flip is right here. That was possible. I wanted to see it clear the belly of the RL10, so I get short here. Standard wrist box. Checker hold. Now my target's going to be down into this cluster. That's where I'm expecting it to solidify. Pretty much. Gets the bounce. A bit of a penetration, but then it mellows out. When that gives me that second, now I really feel like I got to be out. So I just take the PSAR exit, and that's about one risk, 1, 2, 3. So now we're at plus 13. And this is a PSAR flip. So that's a stop and reverse. That fails. That's a stop and reverse. A few minutes later, that's a scratch. That's a collapsing dragon re-entry. Scratch, collapsing dragon re-entry. Picks up another 2. Those pretty much pay for each other. So that's about 15 for the day. Alcoa. Checker hold. Sniper trade brought to you by the letter A. All right, let's see how the boys traded today. Nolan's added his trading rules in. What I'm going to notice, I like the one symbol, one strategy. That's reminiscent of Kata 2. I think the 1 minute on the Aussie dollar and the Qs, I think you're going to find that's going to be very tiring, and I'd say stay with it, give it a shot, but I think I would advise you to take a look at the 3 minutes, and then on the Aussie, I'd say take a look at the 5 minute. Compare your performance against Luke and Woj, and then see what you're coming up with for insights. 1 minute is very fast in Forex, and that's a little more volatile and chaotic than I prefer. I've found that's it wears me out, to be honest. I like that you're going to shift from one to the other, so you're not issuing the span of control. Good job on the plan, prepare, execute, and assess. Post 1 trade a day, and I think you're in good shape. Exit rules for the collapsing dragon. Max of the RL10 or the PSAR flip for the initial risk. That's reasonable. I would like you to compare that against the MMRB of the R10. That's where we take the 1/10 of the range stat. Yeah. And that will vary a little bit, whether, the PSAR flip is going to vary a little bit depending on the time frame you're using. So the 3 minute and the 1 minute will print at different locations. When the Uwe PSAR is 1 dot below the entry, trail the PSAR. Okay, that's reasonable. That's my brother's sniper exit. That's a good way to preserve profits. Although he doesn't wait for it to get all the way down to the PSAR. Once it crosses the baby dragon, he'll get it before it gets out of the dragon. That usually happens before the PSAR, but you can fine tune that. Well, if the PSAR is your 1 hour stop, then you can't get more than a 1 hour loss if it goes and hits the PSAR. But I take your point. Um, um, yeah, that's reasonable. What we're hypothesizing there is that 2R is a remarkable move, and that's almost like trailing it with one wrist box anyway. That's not bad. Look at the. I want you to listen to the 2R battle drill, the original version, and then my brother's 2 videos on that recently posted this week, as a way to sharpen up your insights on that one. Yeah, if outside the Z3, don't let it back into the Z3. That's pretty tight. Certainly not. Don't let it get past Z2, but that's that horn of the dragon. And I think you got the essence of it there. That is an exceptional condition that you want to use special rules for that one. All right, so let's take a look at how that shaped out today. Now I'm going to highlight all the patterns that I see, just so that when you come back and study this later, as you start thinking about maybe other patterns you want to add, then this will give you some things to look at. So this is a reasonable collapsing rate. It's also good because it's the VWAP collapsing too. So that's a good short. That's I don't mind getting paid right away. And you'll notice that because you're on the 1 minute, that move happens like 1, 2. I think you're going to find that's pretty hard to get after. The continuation collapsing dragon gets paid. That's a nice job of capturing. Now, that's also, for later study, the supported spring crossing, and this is a kata 2, and you might be interested in that move all the time. And then this looks like a collapsing dragon to me right here that should be taken, with an exit probably in here. And then that is a kata 2 also, because you have a swing low and a higher low. And here's the PSAR flip, and you crush that one. There's another kata 2. There's another kata 2. You could have actually had 3 positions on this one. And then that little 2-bar horns of the dragon, what you'd certainly want to get out here. That's where I think your short should be, here rather than here. And then that makes that trade a little better. Now, notice that this one has a high, a low, a lower high. You want to pound that one right there, and you'll get all of that move. It's not really an SQC yet because, yeah, maybe. The 1 minute gets a little tight in here. The collapsing dragon and the Z3 excursion trumps for me, so I think I would want to crush that. So I think there was as much as 10R available inside these various moves today. So as you get comfortable with execution, you're going to want to look at these as a pairing or a trio, because what will happen is when you have a tight SQC or a Z3 pinch and that thing breaks down and makes the first reversal, you'll see the PSAR comes down here, and that's going to give you an SSC. And if the SSC works, you're going to get a series of kata 2s to the upside where you can start pounding those little re-entries or adding positions. But if it fails, you're going to see that the belly of the RL10 sets up a nice collapsing dragon. So the SSC is the centerpiece of our idea. I'm going to put that in yellow. is the centerpiece of our ideas here, because from that point, it's either going to work or it's going to fail. And the kata 2s are going to give you plenty of grinding upward moves. And the collapsing dragon is our number one favorite one. So this one actually becomes a nice train re-entering the station, and it's going to go up. The least likely move is for just to grind sideways, because the harsh winter that was the first move down here, that's a precondition of the SSC, and which establishes that little turning point for the CD. The fact that it had that harsh move is why we know it's in play. So you're either going to get a large second leg down or a reversal to close the gap back to wherever it started from. So that SSC is really a crucial pattern. I like that you're concentrating on the CD, but I want you to start observing for those other ones and start marking up your charts to at least identify the patterns when you see them, even if you're not trading them in the month of October. This is a nice implementation of the plan, prepare, execute, assess, and the daily AAR. So he's figured out, in planning, all I got to do is select targets and strategies. That's all. Have plenty of things to work with. And then the detailed framing. This is the essential step. The more you rehearse, not only entries, but also trade management and 2-hour battle drills and exits, then the less you have to think in execution. We'd like this to be no thinking, please. We want to sense and respond just like we rehearsed in the prep. You'll see this happen so much. What I want you to notice on this, when you want to grab profits, that's going to lead you to start encountering your sniper mindset. And what I generally would say is, I'm not opposed to taking half of the profit with the sniper to just satisfy the urge and make a little bank. And then if it doesn't go back and hit the managerial stop but then resumes, you can put that half back on. And so this way you don't suffer existential angst. Yeah, take all the trades. Yep, I like trailing stops. Yeah, 1 minute chart is tiring. Yeah, don't take the PSAR is a minus 0.5. Looks good, looks good. Yeah. Now, one of the things that if you start looking for the SSC pattern, then that's a good way to stalk the CD. If you notice how I was drawing support lines on the market chart today, that's essentially how I'm stalking. Yep, looks good. Good work. This already feels a lot more professional, doesn't it, than chasing 5 symbols and all the patterns you can imagine. Tim back to his winning ways now. Here's the SSC, standard risk. Of course, he sees that 2 spiky horns of the dragon, so he gets paid. Re-entry gets paid. Pretty close to the spot, gets paid. Gets paid. This one might have been a re-entry here. When this is at the low of the day and rolls over and breaks, and you got these descending highs, and the PSAR never really flipped. Yeah, that's one. That's a good way to reset, get paid, get paid, get paid. Nice work. For his daily debriefing, he concentrated on being in the 0 state, flawless execution, took a lot of little bites. Yeah, focused targets. And stepped out when he started thinking about the money instead of trading well. Nice work. Woj in Devon and Tesla. Here's his OR3. Gets short about at the right spot. Gave back quite a bit, but that move happened pretty fast. We might have gotten the top of that bar for a little improvement. The entry should be here, not here. That would make this a winner. Here's the Kata 2 we missed, correct. This one cleared the previous resistance, so that's an emerging dragon. It got paid. There was a Kata 2. Stop trading. There was your PSAR flip. There was your PSAR flip. Both of those would pay off. 0.3 for Devon. Tesla for 3R. Gap down, sells off, makes a new high of the day. Why not? Targets, gets paid. The short could have been here when it breaks out of the dragon, and then that would have paid off. That's a great stop and reverse. There's a Kata 2, there's a Kata 2, there's a PSAR flip. 2.9 for Tesla. Minus 1.7 in XRP, the one that he smashed yesterday. A couple scratches, missed the PSAR flip. Monkeyed around with his times, got him desynced a little bit. That's where our long should be instead of here. This is where the long should be, not here. We're consistently late. We yielded an R twice that we didn't have to. This was correct and got paid. That's where we got to be. And then when the PSAR breaks, we got a second position there. That's pretty good. That's pretty good. This is where we should be. So that's 3, 1, 2, and 3 places where we delayed entries by a full R. That would have made, instead of minus 1.7, plus 1.3. That's a crucial mistake. Couple good scratches, so minus 1.7, so 1.5 for the day is how I'm reading that. And then carries that into the Aussie dollar on the 5-minute. Late. Kata 2 is good. Kata 2 is good. That's a good short. So's that one. That's a good quick scratch. Stop and reverse was excellent. Scratch, 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 and a little bit of grinding. That's yeah, that's not so bad. 2.2 plus 1.4, 3.6 for the day, 40 for the week. Nicely done. All right, let's get to the weekend reports. Again, we'll have our swing workshop tomorrow night. The swing reports. Starting with the weekend report here. Bear normal. You don't see that very often. All zeros and a 1 for oversold. Risk off still. Risk Z starting to collapse. Still at 0% on ETF2. These are the leaders for October. Of course, the rules say we're all cash and have been that way for a while. Good defense in blended monthly rebalancing. You've seen the 4 timings already. Here's ETF2 saying pretty clear. Everything below its 4-month moving average. There was a little bit of strength, but not much, and that's always temporary and cyclic in energy. Other and look at utilities. You thought that was a safe haven? There goes that assumption. ETF 32. Just a few things had good weeks, and that's your oil exploration, energy itself, gold has not been a safe haven in spite of earning some money. No. Silver's a little better than gold, but that has not been a safe haven either. Cash or trading a live position is about it. Walmart's the only symbol in our tactical stack for stocks that's in a buy. Not so bad there. Home Depot has been a tactical play. Nike, a company of evil, they're getting their just desserts for child labor. Karma. ETF world market model. U.S. starting to drift below average. Latin America and Brazil. About the only thing showing strength besides the occasional pop in discretionary and in energy. But those are both very cyclic, and you can't go to sleep on those positions. Look at the liquidity based on ATR percentage. There's some definitions for you. Energy, bio, Brazil, oil exploration, and the gold miners are optimized for that short-term trading. Shift to the daily report and dashboard 1. Again, we've seen that. Merck, Johnson & Johnson, Home Depot, United Health, and Pfizer. So it's all the pharmaceuticals. But otherwise, Alcoa, Nike, Boeing, Disney, Tesla, all getting smashed. Tesla, not so much. But those other ones certainly getting murdered. The weakness in the NDXs for the Dow 30 continues. Look how many things are breaking down on the 6-month. This is long-term structural damage. Everything's on an auto framer because we've fallen so far from the 10-day. In the ETFs, it's the same story. Everything is on a auto framer. Lots of things have broken down on the 6-month. No safe havens. Traders market. Auto framer tells the same story. Only 3M is on a squeeze. These are the opportunities right here. Godzilla looking for the combination of I like the double greens on these guys. You might also be interested in these two because they've been relatively quiet on the 5-day and just started their moves today. Whereas these that are green and green are in full-fledged movement. Diamonds was the only one that had that kind of characteristic in the tactical symbol set for Godzilla. But that's the primary pattern right now. I've added one here. I'll play with it a little bit. The 1-day mover. So what I'm doing there is now I'm sorting it by the magnitude of the move on a Z-score for 1 day. So the CCL gives a move of 5.5 sigma. And so these are all the ones that are better than 2 sigma. So those are extraordinary 1-day moves. They also happen to be part and parcel of a large 5-day move, with the exception of TJX, which it's just the beginning of the big move. I'm much more focused on this side on the volatile one as we're seeing symbols getting pounded. CarMax was another big one today. Yesterday got murdered. Was down big today. There's your CCL with 5.62. So to me, the double volatile ones are the most interesting. Sniper stats and the sniper report stats for the tactical symbol set. You see everything is basically in the winter. A few scrambling around in the spring for the MACD, but winter is just crushing everything. The NDX, that bright red will certainly scare you awake. Only a couple things bucking the trend right now. Brazil, silver and gold, Latin America. I wouldn't bet on that for the long term, though. Tradable for sure, but the downward slide continued today to close very weakly. The slope of the 30 is now more than one standard deviation from the long-term average and below the zero line. We're getting ready to test important despair levels with respect to the 200-day moving average. And just that was that long grinding move to the upside. That's a 15% sell-off in that rollover. And that's my argument why you need to pay attention to turning points that are when it's more than one standard deviation from the long-term average. So this was 2 standard deviation and rolled over. That gave us plenty of warning when the price was still up around 430 for that long slide. Got to pay attention to this chart. That's everything I want to cover for today. Looking forward to Ken H's tactical setups for tomorrow. Keep your risk measured and your powder dry. We'll see you tomorrow.